Hi, welcome to the course. Now, if you are a long-term investor, then you may be identifying good stocks with the help of fundamentals and analysis of the financial statements. But if you are a short-term trader, or if you trade in futures and options, then the biggest dilemma that you must be facing is when to buy and when to sell for the short-term duration. Different traders follow different techniques. Some depend on technical analysis, some take cues from the algorithms, and some traders rely on candlestick and candlestick patterns to identify trend reversal. In this course, we shall study about the candlestick and the candlestick patterns. But before we begin, let me show you a small clip of a game which you may have played in your childhood some or other time. So have a look.
It's Switzerland with a one-up advantage. Germany with it all to do. This, of course, for the gold medal in the 640 men's.
Okay, the Swiss machine is attacking. Well, Germany, what can you do?
Oh,
Give it a 5. Ooh, it doesn't look too good.
And it's
No, oh, Switzerland takes the gold medal. Woohoo!
That was the game of tug of war. Now, while the game was in progress, if I were to ask people as to which team would win, then I would probably get answers which may fall in either of the three categories. One would be sentimental attachment with the team. Some people who are sentimentally attached with the team would just want their own team to win, irrespective of how the team is performing. But the reality may not sync with the sentiments. Then the second type of answer would be from those people who would just toss a coin and decide the winner. But that is speculation, a 50-50 chance. And I strictly do not recommend speculation. The third type of answers which I will get will be from those people who know the game. And people who know the game would look for signs and signals. They would watch the movement of the players. They would observe the anchor. They would look for slippages. They would see how the players have positioned themselves and so many other things. All this would require knowledge of the game. Of course, it will give you more fun, but at the same time, it also increases your chances of being correct in your assessment. Your assessment may keep changing till the final outcome of the game. As the players change their position, as they make movements, your assessment will constantly change. Then suddenly a player may slip and the final outcome may be different from what you visualize. But such risk is always there in everything in life. Now coming to the stock market or your trade in futures and options or any short-term trades, there also it is a game of tug of war between the bulls and the bears. In the short term, the bulls want the price to go up and the bears want the price to go down. That is in the short term. Of course, in the long term, the intrinsic value of the company, the fundamentals, the financial statements, all these things come into picture. But when we talk of the short term, then it is indeed a tug of war between the bulls and the bears. Now, if we ask as to who would win, whether the price will go up or go down, then again the answers would be in three categories. Some people are so much sentimentally attached with the stock holding that they refuse to believe that the price can go down. But personal sentiments do not work in the market. The second type of people are those who just toss a coin and take a bet. This is purely speculation, and you know that I am strictly against speculation. So, if you are even thinking of speculating after completing this course, then my sincere advice to you is that this course will not serve your purpose. If you are wanting to learn the game, then this is the ideal course for you. So the third type of people, and I hope you are among the third type of people, are those who would read the charts and then make an assessment. Now, if you want to read the charts, the candlestick charts, then they appear something like this. On the trading platform, on the screen, the candlestick charts in their purest form look something like this. What you see, the red and the green bars on this chart, they are the candlesticks. And these candlesticks, as they progress, they make some patterns. Alright, so what you see in the circle is a candlestick pattern. And by looking at the candlesticks and their patterns, you can determine as to who is dominating, the bulls or the bears. And then how much is the dominance, that also you can assess and analyze. Then how long that dominance is likely to continue. You can also analyze whether there are any signs of continuation or reversal of the dominance. Please remember that the charts do not tell you what will happen in the future. They only reveal as to how the tug of war between the bulls and the bears is evolving. Then, based on your knowledge, your experience, your reading of the charts and the patterns, you have to make an assessment and decide whether the price is likely to go up or likely to come down. Your assessment can still go wrong if there is a sudden news or some unforeseen event in the market, or if your reading of the charts is inaccurate. But please remember that when you make a decision based on your knowledge, your analysis, your reading of the charts, then your chances of being correct will be more than when you take a decision by tossing a coin. So I hope that point is clear to you, and now let us begin with the course.